Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Wednesday, October 17th, 2012. Thank you all for tuning in. Let's jump right into the charts here. We'll start off with the usual S&P 500 E-mini futures. You'll see the futures are trading up by about 2 points. Make that 2.5 points to 1451.50. The NASDAQ futures, however, are trading lower. So take that into consideration. You do have the NASDAQ futures trading down by nearly 5 points here to 2,760.5. But the S&P 500 E-mini futures are trading higher. Generally, when we see the futures trading higher on the S&P, we know that the dollar is usually lower, and that certainly is the case today. The dollar is trading lower by 46 cents. That is a bludgeoning. I mean, that is a massive, massive decline on the dollar. So once again, take that into consideration. The dollar is down sharply. Futures are not really up that much on the S&P. NASDAQ futures are lower. But the one way to keep the market buoyant, if you're a central bank, is to knock the dollar down. You'll inflate everything else. And that's exactly what's happening here this morning. Something else you should take note of is that all of the European markets are doing very, very well this morning, holding steady. You actually have the Italian market, the FTSE MIB, Milan, trading higher by 1%, and the Spanish IBEX 35 market is trading higher by 1.3%. That even comes after there was a potential warning of a downgrade, although Moody's did not downgrade Spain. They did, one of the, I believe it was Moody's, maybe it was another rating agency. They did say that it's on outlook negative, and they may have to drop it a few notches if things deteriorate further. So one way to save the markets, get the dollar down. That's exactly what we're seeing here this morning. All right, let's take a look at a few different things out there. We'll start off with gold. This morning, we're seeing gold rise by just $5. Not a big move. You would think with the dollar decline, we would see a bigger pop in gold. But again, gold just isn't ready to bust out yet, so it seems. Let's take a look at the GLD. The GLD this morning. Let's get that ticker up there. You'll see the GLD here trading at $169.75 per share. Closed at $169.42. So a little pop there, but nothing all that dramatic. Again, about a 50 cent move, which is pretty much equates to around $5 on spot gold. Oil this morning is also just trading up 29 cents. You would think oil would be up a little bit more with that falling U.S. dollar index. Oil is trading at, light sweet crude I should say, is trading at $92.34 a barrel. Let's take a look at the USO, which is a good proxy for light sweet crude. That is trading at $34.26 a share. So again, that's up a little bit, closed at $34.13 yesterday. Decent little move. But again, nothing dramatic. The dollar is a dramatic fall. I would expect commodities to move up sharply, but that is not happening. Something that happened last night or earlier today, I should tell you, is that BHP, let me just pull up the stock. BHP, this is one of the biggest metal producers in the world. This is a big metal and mining stock. They said that demand in China has peaked, and that is worth noting, and China would be slower over the next decade. So they're telling us a little bit something here, what's going on. If BHP is telling us that, BHP Billington, that is not a positive going forward. Tells you that China is slowing down. These guys have the inside track on exactly what's going on out there, as they are the ones producing the metal and selling it to the foreign countries. Again, they're an Australian-based firm. So just realize they're saying that China has peaked and it will slow over the next decade. So again, all of this inflated metal prices that are taking place really is just due to quantitative easing, and that's something that everybody should keep in the back of their minds. All right, there's a lot of stocks out there. Let's jump right into them. A lot of gap plays this morning. Let's take a look at IBM. This is the big one. Reported earnings yesterday. Stock is getting sold off. Trading right now at around 203. I think IBM can get down to $200. Gets down to $200.50, $200 even number. Right there, I think that is a bounce level. This is a strong gap down for IBM, so I expect the $200 level to get tagged. The next level would be 196.91, then 193.37. Those are your respective downside levels for bounces on IBM. But I do expect the $200 level to get reached today. This is a strong gap down. All right, let's take a look at Intel. INTC is the ticker. Intel Corp, world's largest chip maker. Again, this stock caught a bid yesterday, closed out at 22.35 before the closing bell. Today it's trading at 21.38. It looks like they beat earnings or whatever it was, or expectations. I shouldn't say they beat earnings. It's all about expectations. But it looks like they guided lower in the fourth quarter. I think that's what I heard. But who cares? All we care about is stock price and where we can find a trade on it. Nothing to do on Intel right now. If it holds here, and it could hold here, that's fine. But watch it down all the way at $19.21. I think that's where you can look for a quick bounce on Intel. Again, fairly strong gap lower, so I think it has a legitimate shot of getting down to that level, 19.21. That would still be another dollar and change lower. Let's take a look at Intuitive Surgical. This is a really, really thin stock. ISRG is the ticker. Stock had a pretty good day yesterday, closing out at $533. This morning it's trading at $508. I don't think there's really anything you can do with Intuitive Surgical until it gets to that 490 level. It might be 493, or it might even just be 490. It's going to be in that vicinity. This is a really, really thin stock. It's a very, very tough stock to day trade. But again, high price stock, low volume generally. But watch this thing get down to the 490 level. Might be 493. It's just really hard to put my finger on the exact price when you have this kind of thin volume on it. Let's take a look at Apollo Group, APOL. This stock is trading down at $24.30. This may be an all-time low for the stock. Well, not an all-time low, but a multi-year low. You have to go way back in time. I'm going to say you have to go back all the way till 2000 to find 2001 to see where this thing traded out. I don't think there's much to do here on this Apollo at all. This is a fairly strong gap down. Hard to pinpoint a real good level. What I'm going to say is $20. It gets down to $20. I would probably look for a bounce there. That looks like a pretty decent area. It might be even a little bit lower. A Pierce of 20, 1950. But that is definitely a big support area where I could see the market giving this, protecting this or defending it. So watch that $20 area. It might be even a Pierce of $20. Other than that, I really wouldn't do much with Apollo Group. That's the only level I would get interested on. Let's take a look at CSX. This here is one of the leading rail stocks. Again, closed out at 21.63, trading right now at 21.45. I don't think we can make much out of it. The rail stocks have been beaten down. Again, if this thing got to around $20, maybe $19.75, I think it probably is worth the scalp. But other than that, I'd leave it alone. Let's take a look at Fortinet. Ticker symbol is FTNT. This one is getting hit pretty sharply. Closed at $24.80, trading at $21.26. I do have some levels for this one. Looks like $20.77, maybe $20.75 in that vicinity. Looks to be a very, very good support level. That's the only level that I'm really seeing right now that looks interesting. 2077, 1906 would be next. And after that, say goodnight. It's all the way down at $15.82. So again, this one is getting roasted, toasted, and be careful with this. This is a strong gap down. Let's take a look at CREE, everybody's favorite new light bulb. CREE is having a pretty solid day, trading around $28.50. This thing, although the gap is not super strong, it probably has upside to around $29, $21, possibly even $30. So I would not really get interested in selling this one short right now. It could get up to those levels. Right now it's trading at $28.50. I do expect $29, $21, possibly even $30 in the cards. After that, it's $30.70. But it's not a weak gap and it's not a strong gap. It's more of a neutral gap up. So again, but you have to be careful on these because they can get to certain levels. Let's take a look at Halliburton. Halliburton is selling off a little bit today. Closed at 34.56 yesterday, trading at 33.90. The stock is going to have some support around 32.16. It's a fairly strong gap, so you want to be a little bit careful. Then more support around 30.77, and then 29.23. So as long as you don't trade into those levels before the opening bell, they could probably all be scalped should price get down to those areas. Another stock I'm seeing today, which is a takeover, is CYMI, which is Cymer. This has been bought out by ASML. Big premium. If you own it, congratulations. God bless you. That's a great buyout right there. Stock closed yesterday at around 47 and change. Today it's trading up near 80 bucks. What could you say? There's nothing to do. Don't short it. Don't buy it. Don't do anything here. There is nothing to do with Cymer. The play is over. It should just flatline into oblivion and until it's taken over by ASML. Okay, with that said, I'm going to leave it there today. I know there are some other movers. There's just so many stocks out there gapping up and down, but we can only do so many in a single video. I want to wish you all a great trading day, and we'll see you on the charts tomorrow. Take care, everyone.